I hope you are. You might be seeing some black boxes. I'm not really sure. I think Zoom pushed out an update. Here we are. Welcome to Afternoons with Aces, Cloud Reporting Series. We're going to cover the Financial Reporting Studio Statement of Cash Flows today. Just like last week's, we went over the balance sheet. Today's a relatively uh, short session, but it's important. We're going to talk through some basic concepts of the cash flow, how you're supposed to do it within the Oracle Cloud, and just some best practices. And hopefully we'll get some questions. We did have a few last week. Colleen and Heidi are on with me from the Creole side, so we should be good to go. So first I'm going to do is we're going to go through some introductions, then we'll talk through statement of cash flows, and then really open it up for questions. All right, so my normal compatriot in this session, Afternoon with Aces, Lee Briggs, is off on PTO today. So Lee is my Cloud ERP team director. He has been with Creole since 2018. Lee and I have worked together, I think, going all the way back to 2001, I think, through several different organizations. Lee started out in EBS and then moved over primarily into cloud in 2013. He's certainly been doing a few EBS projects along the way. Lee was the first Creole Oracle ace. He actually got his ace when we were together at a company called BizTech in 2013, and he continues to maintain that. You do have to do a number of presentations and knowledge sharing, which is one of the reasons we do these webinars each year to maintain that. He was also an OATUG Star Presenter of the Year in 2014. My name is Tom Simkiss. I am the Commercial and SLED Practice Director for Creole, a wholly owned subsidiary of SMX. I joined Creole in 2017 to start their cloud practice. I got my Bachelor of Arts from Science College all the way back in 1995. And I got my Juris Doctorate, which is a fancy name for a law degree, from the James A. Beasley School of Law, I think back in 2002. I got my Oracle ace a year after Lee in 2014, and I got the OATG Star Presenter of the Year in 2017, 3 years after Lee was awarded his. All right, so a little bit of accounting overview. I got a lot of words on here, and I really normally don't like slides with a ton of words. You're not supposed to do that, but there's not really a great graphic for showing the difference between the direct method and the indirect method. And essentially, what the main difference is that the indirect method is based upon accrual accounting, and you really just use a net change between most of your balance sheet accounts to come up to where your cash flow, your ins and outs, get you from your beginning cash balance at the period you are reviewing to your current cash balance. The direct method, more likely than not, can be referred to as cash basis accounting. I have a lot of companies that, not a lot, I should say that. I have some companies that, even though they are an accrual basis company, they do the direct method for their statement of cash flows. It is really difficult to do that within Oracle Cloud ERP unless you have a secondary ledger that is configured for cash basis accounting. It certainly can be done, and companies do cash to book adjustments quite frequently, and certainly do it for tax purposes. But to do it within a report without doing adjustments is quite difficult. The indirect method is that it's really you're doing a net change. And I'm going to kind of talk about some things that my company has done from a configuration perspective that really does help when you're doing your reporting. So statement of cash flow is reality. And I'm really going to speak to the indirect method on this slide. Again, not a great slide. It's really just words, but I'll kind of talk, at least conceptually, about some things that Lee and I have done at our clients to facilitate the creation of a statement of cash flow. So there are certain transactions in a statement of cash flows that just don't flow well in Oracle. And the example they have on the screen is an asset retirement. So in Oracle Cloud, when you retire assets, essentially all that it does, as it should, by the way, is it does a credit to your asset account and a debit to your depreciation account and the accumulated depreciation account. So the net change on your balance sheet is actually zero. But what should happen is if it's an early retirement of the asset, it really should go to your operating section of your statement of cash flows. And normally when you add assets, that is considered an investment, and that will go to the investing section of your balance sheet. So it's really kind of difficult unless you want to have a separate asset account to get, a statement of cash flows automatically from the system. And there's a couple other accounts that are like that as well. If you acquire debt, and it's long-term debt, again, that would show as an increase in cash from investing activities. But if you retire that debt early, again, that doesn't belong in investing. That actually belongs in the operating section, your cash flow section. So if you really want to have all these separate natural accounts uh, to facilitate the automation of statement of cash flows? And in my experience, the answer is no. So what Lee and I will typically do is we'll either use a segment in the chart of accounts, whether it's a future segment or additional segment, or we actually will also sometimes use an additional cost center segment, which we call cash flow adjustments. And we will use that to record essentially a reclass in certain activity that can flow in the statement of cash flow. So for example, if you retire your assets early, what you do is you can either use SLA or you can book a manual journal entry to hit a different cost center or a different value in your statement of accounts, so that when you include that value in your statement of cash flows, it will move that balance or that activity from where it would normally go from operating to investing or from investing to operating. Right. So that's a really high conceptual overview. It's just something I want you to bear in mind. What I usually say to my customers is, if you're not willing to do that, and I get why you wouldn't be, then I can get you a statement of cash flows out of Oracle with about 90% accuracy. And then some folks will have the statement of cash flows go to Excel and they'll do those adjustments within Excel. But if you really want it automated from Oracle, you can do it. And using that additional segment for adjustments is a good way to do that. So with that said, let's kind of talk about, how you should go about doing this within the tool. All right, what we have here is a finished result. This is from the Vision demo environment. If you have access to a Vision demo environment, you can actually see this in here. And it's a very simplistic balance sheet, statement of cash flows. Hey, but it does kind of show you the best practice for doing it. And I will say that the way that, whomever built this for the Vision demo folks, they built it exactly the same way that I built cash flows all the way going back to EBS and FSGs. In FSGs, I used, hidden columns in order to do what I want. What we do in FRS is that we actually use hidden grids. But you actually can use hidden columns as well. It gets you to this kind of same place. It just, the hidden grids gives you a little bit more flexibility. So, what are we talking about with a hidden grid, and, what are we using? So what we have here is the grids that are used to actually build this. So we've got this balance sheet grid, which is over on the left-hand side. Okay. And that's got my current assets and my current liabilities and my stockholders' equity. And then I've got my cash flow statement on the right-hand side. Okay. And we kind of use this as, a proxy to get our net change in our accounts. Now, can you have a separate hierarchy? Lee and I talked really kind of ad nauseum through this whole series about the importance of hierarchies, and how, if you have a really good hierarchy um, to you can get your income statement automatically. You can get your income statement automatically. You can get your trial balances automatically. As Lee and I showed on last week's session, you're not going to get your balance sheet automatically. You do have to build that. But you could have a hierarchy for cash flows. In my experience, I have not done that. We typically will use most of the balance sheet hierarchy, and it kind of gets us generally where we need to be. But here's the logic. We're getting our net changes, right? So we've got one grid in here. And the grid's highlighted in blue. That means we've selected it and it's active. And really all we're doing is we're hiding the grid, right? So we're going to use this hidden grid to pull in essentially our balance sheet, right? Which we can have our beginning balances. So as of the period that you are analyzing, right? So what does that mean? It means if I'm doing a statement of cash flows, as of March 31st, you're typically going to want your beginning cash balance as of the start of the year. Um, some folks will actually use the beginning cash balance at the start of the period. You certainly could do that. So depending upon when you are reporting, if you're doing your income statement period to date and your balance sheet is always as of a period in time, then you would want to get your net change from your prior period balance sheet. So again, depending upon what story you're trying to tell with cash flow statement, that'll determine what balances you're bringing in, both from a beginning period, and of course, from the net change that you're trying to report. All right, so here's what my grid one looks like, right? So really all I'm doing is I'm summing up my balance sheet. And if you look, I've got that product balance sheet at the top of my screen, right next to where it says sum. You can see where I am referring to. So we're actually going from our balance sheet. I'm going to go back up for just a second. Okay. This is my balance sheet grid. Okay. So in this uh, screenshot here, I'm referring to that other grid. Okay. And I'm getting my products and I'm getting the row and I'm getting the column and I'm just, offsetting it by -1, right? So if it's an increase, it'll show, because it's a balance sheet increase. And why would you have an increase in your depreciation expense? Well, really quite simply, you ran depreciation for the prior period and you have additional balances and accumulated depreciation, right? So that is going to show as an increase in cash. Whereas if you lowered your accumulated depreciation, hey, guess what? That's going to show as a decrease. And we've got that negative offset. And Lee and I kind of talked about that last week when we were talking about how to build the balance sheet. When we bring our balances in ERP, a credit balance has a natural sign of a negative, right? So the way you get that to show on a balance sheet is you use your formatting to have that number scale by -1 so that a liability shows, as a positive if it's credit balance, and it would only show as a negative if it is a debit balance. And the balance sheet behaves the same way for assets. So we use that kind of similar logic here on the statement of cash flows. So we get our increases and decreases to show the way that we want. Okay, so a lot of these things that you can do in FRS, you're not changing any information. We're just kind of bringing everything in. Where it gets interesting is in this grid, and we don't have it shown, but in this grid, I don't have any additional segments being shown, right? At the very top, you can see I got my ledger, and the screenshot doesn't show it, but you've got the company segment, you've got your cost center segment, where you could potentially use that company segment or a future use segment or a different cost center segment would be you would actually want to include the cost center on the row. And you can actually just hide that. But what that would allow you to do is, if you want to include only your adjusting journal entries, you either include or exclude that adjusting cost center, that offset value if you're using a future segment, so that you can move things around from operating or into financing or into investing. All right, it's really kind of a cool trick. All right, so cash flow statement. I get my beginning and my ending cash flow balances, right? And that's really all we're doing using the indirect method, right? So how do we do this? We get my beginning period, and then you can use offsets in order to get it, right? So if you're running this cash flow statement as of March 31st, that's going to be your period of interest. To get your beginning balance, a couple things you can do. You can either, get your balance type as beginning of the period, or you can get your balance type and then just use a period offset to go to the beginning of the year. A couple different ways you can do that. Lee and I have talked about those various tricks throughout this series. And if this is the first time you're joining a session, you're like, man, what's this guy talking about? All of these sessions are loaded up on YouTube. You can only go back and watch them at any time you would like. But we're getting our beginning and ending cash balances, and then we're just showing the net change on our statement of cash flows. And that is it. As I said, this was a quick hitter. It really is just building upon the concepts that we have come up with all the way from the beginning of our sessions to where we are now. So Colleen and Heidi, we had a few questions last week, just, from the group. Do we have any questions for this session, or are we good?
We are good, Tom. There was only one, and it was about that black box, but I responded to that one.
Yeah, we got to work on that. I apologize for the folks. I'm not sure why we're getting that black box. I never had that problem before. And then on the last two or three webinars I've done, we've had it. So I'm gonna have to do some troubleshooting. Well, as I said, this was a quick hitter. So if you don't have any questions, I do appreciate your time. As I said, if you're a new attendee to these sessions, if you'd like to go back and watch some of our other sessions, you certainly can go ahead and do that. And all your questions should be answered. And if they're not, you can always reach out to Lee or I on Twitter. Lee is I think it's at BT Lee Briggs on Twitter, and I am at Thomas Simkiss. We're also available on LinkedIn, and our emails are available on the SMX or the Creo website. If there are no questions, I guess the last thing I will say is our next session of Afternoons with Aces will be in October. I want to say it's October 18th, Heidi.
That's right.
And it's on connecting OTBI. And it's really cool. You can do a couple things about connecting SmartView to OTBI and doing that for reporting. And if anybody on the chat here is going out to CloudWorld, please look me up. I will be out there, and Colleen will be out there as well. So certainly hope to meet up with some folks. Have a great day. Thanks, Heidi.
Thanks. Goodbye.